Remember on the Euro US dollar, we had a big move. The price went up to resistance on the weekly chart, and of course we expect at some point a bounce. So the bounce came on the daily chart. The price created a red candle here, and then later on it moved lower. We have other support areas here right now where the price is, and of course higher in this area. In extension down here, the 1.2750, 1.28 area is major support. That is the bottom of our weekly chart range. Okay, and because we knew that the price bounced, we expected on lower time frames setups to trade the bounce. Now on the 4-hourly chart, the price broke our 36 EMA, which is our trend line guide, and below here we are looking for setups. Now there are two ways to do that. You can use on higher, if you want to trade on higher time frames, the 4-hourly chart. That means a 1, 2, 3 with a retracement to the 36 on the 4-hourly chart, or on the 1-hourly chart, a retracement back to the 36 EMA. Correct? Now if I switch to the 1-hourly chart, the first setup we had was really not at the beginning of after the trend line break, but the price actually moved down over 250 pips, then retraced back about 100 pips to the 36. So that is not a perfect 50% retracement, but the price stopped at the 36. Now if that setup is too steep for you, like if you don't like it too much because the price moved down too far after your support line break coming from that 4-hourly chart, okay, there are ways to enter a trade on lower time frames. And what we do, you already know that, of course, we can combine a 1-hourly chart with a 5-minute chart. And how we do it, you know already, but just to make sure, if we have our 1, 2, 3 setup, we wait for the price to bounce on the 36 in a downtrend, of course. Then if the 2 to 3 line breaks, we are looking for 1, 2, 3 setup on the 5-minute chart under the 200 EMA, because it's a short. Over the 200 would be for longs. Correct? Are we all okay so far? I think yes. So what happened after that big 1, 2, 3 on the 1-hourly chart, when we switch back to the 5-minute chart, now I have to scroll a little bit, we got a 5-minute 1, 2, 3 setup, and that was also a textbook setup because the price moved down from that previous bounce on resistance about 40 pips. Retraced about 20 pips, which is 50%. It also stopped at the 36 and the 200 EMA, and with an entry after the 2 to 3 line break, according to the intraday day trading rules, a stop over the 200 EMA and the 36 EMA, or you could even put it over a resistance line. So this is your 2 to 3 line if it's close by, of course, not if it's 100 miles away. So you have a maximum stop of about 20 pips. You take out the first lot according to the rules with 20 and 40 pips, and then you have one last lot open. So what do you do with that? At least, I don't know, 10-15 answers. What happens with the last lot? We can, instead of managing it on the 5-minute chart, we can start doing what? We keep it, yes, but why? What do we want to do with the last lot? Now we trail it on a higher time frame to turn a day trade, because there's a day trade entry in a possible swing trade position. So we got that entry on the 5-minute but the higher time frame we looked at to take the decision on the 5-minute was the 1 hourly chart. So what you can do now is you can trade your stop over the 36 EMA on the 1 hourly chart, and every time the price makes a new 1, 2, 3 and it moved lower, like for instance down here, and then here we had a small break, so only a few candles, and the price was playing at the 36 trying to move higher, but in the end it broke down and it's creating a lower point here. So when you see that lower low on the chart appearing, you start trailing your stop. That is the conservative way to do it, right? Also here you change the angle of the line a little bit because you had some spikes over there, and if the price retraces back to the 36 and moves lower, creates a lower point, you start trailing it again. That's the conservative way to do it. You can also trail the position on the 4-hourly chart if it makes sense, and that means if the price really creates a big nice 1, 2, 3 retracement to the 36 later on and it moves lower, then you can start trailing it also. Right now it would be here, you can start trailing it over the 36 on the 4-hourly chart, but that is really up to you, and both ways are okay. Now on the 1-hourly chart, that's one way to do it, and today I uploaded a video with Zoran's trade. Now I think we have some problems with audio. You cannot hear Zoran's voice explaining the whole thing. I figured that out later, sorry for that. Zoran, are you here? Yes, he is here. I already. Okay, great. So you still have that last position running, right? When we were talking in the morning was like 150 pips in profit, but it went already in 200 pips profits, right? Then it retraced, and right now it should be like 180, 90 pips. So with a 20 pips stop, okay, so that's 10 times the value of the stop with the remaining part of the position. Yeah, and that's how you do it. And everybody, Zoran is not very old here. It's a new trader also, so it's a really good example, and everybody please put your hands together for Zoran here, give him some confidence so he can manage his position. Yeah, great. And now he's trailing the position, and I think I'm not sure, is the stop now over here on the 1-hourly chart, Zoran? I think yes. Or did you trail it over the trend line immediately closer to? Okay. Okay, perfect. Now, well done for that. Also, something else. Yesterday, so that's the way you do this. You combine a swing trade, a 1-hourly chart with a 5-minute chart, and turn a day trade into a swing trade. The second very important part was yesterday's live. Remember when we said trading long at this 36 EMA when the trend on this time frame is still going down is very dangerous, and you must practice it a lot, and if you think it's for you, you can do it, otherwise you leave it. That's what we said yesterday. So if I draw a trend line from yesterday's 36 EMA touches from up here, so we had 1 touch, 2 and 3, the price, let me zoom in, broke the 36 EMA at some point, and we said aggressively you could look for a 5-minute 1 to 3 and go long aggressively. Why? Because at that point the price is close to the 36 and we don't have a confirmation that the price wants to stay over the 36. A confirmation would mean a crossover, so the 12 is crossing the 36 and then you see a 1 2 3 setup over the 36 on the 1 hourly chart, and then you start looking for a 5-minute entry. That's the conservative way to do it. Aggressively, you would just look for a 36 EMA break and then a 5-minute 1 2 3 over the 200 EMA to try it out. But I told you yesterday that I avoid personally doing this, because usually it can backfire if it doesn't look good. So if I switch back to the 5-minute chart, at that point from yesterday, you see that's what we had yesterday. The 1 2 3 as a 1 2 3 looked perfect, right? It's a good volatile move, but we had the 36 EMA as resistance, and remember in this area also the 36 EMA from the 1 hourly chart. The trend was down on these lower time frames, and trying an aggressive long on the 5-minute without a real confirmation on the higher time frame is dangerous. And good setup or not, it usually doesn't work that great. So you see what the price did. It gave us an entry, but it stopped at the 633. Remember our sandwich situation, and then the price in the end, it tested it again, but it really moved lower. And what did I say? Who remembers what I said yesterday after that? Yeah, when we tested it and we said take a screenshot to remember these scenarios. What did I say? When the price moves lower, look for what? Who remembers? I see not many people from yesterday's sessions are logged in, so only a few probably remember. Yeah, I was happy it failed. No, I was not happy. I was just it was better to give you that example, because that's usually what happens. What did I say? Who remembers? I remember. I said if the price moves lower again, what could you do? Just try. Common sense. Yeah, if the price moved lower on the 1 hourly chart, that short 1 2 3 here setup, you just need to change the line. Is still there. It still exists, even knowing that there is a not nice 1 2 3. But we said if the price comes down and creates a lower point after bouncing on the 36, look for a 5-minute setup to short it, because the main trend on that 1 hourly chart is still short. Going short on the 1 hourly chart was not a good choice, because we have a lot of support in this area, right? So one choice was to use that big 1 2 3 now that it failed to move higher, wait for a nice 2 to 3 line break, and instead of taking the trade on the 1 hourly, go to your 5-minute chart and look for short setup to try a trade here. Why on the 5-minute? Because we have a combination of a 1 hourly and 5-minute chart. The price failed to move higher, so in a range like this, when the price hits resistance and it cannot move higher, in the end it can only move lower. Yeah? There are only two directions in the end, up or down. Okay, and because the main pressure is still down, we focus on the down moves, and on the 5-minute chart you got a new setup there. That means smaller stop, easier to target the next support area. And if you switch to the 5-minute chart, you see what happened there. Crossover, a lower low, a lower high, break of your 2 to 3 line break coming from the 1 hourly chart. The price is under the 200 EMA. It's a down move of 60 pips, a retracement of 30 pips. So is that a 1 2 3, a good 1 2 3 with the direction of the 1 hourly trend? Yes or no? I know it's not that easy at the beginning, It's steep, yes, but it's the main direction. That was also a little bit steep, but that was a little bit, yeah, it's not that perfect. Okay, so an entry here with a stop over the 36 or over the 200, because you have your trend line close, would be a maximum stop of 30 pips, normal stop of about 20 pips. Yeah, over the 36, over your 0.3. Now the price went down and hit the first lot, first target, and if I zoom out a little bit, at some point also the second target with about 60 pips. And then again, what you can do is use your 1 hourly chart in this case, because you use the 1 hourly as your filter. Draw now your new support line, and now that you have a win-win situation, remember, lot 1 is out, lot 2 is out, and now you can start, now that you see a lower point on the chart, you can start trailing the 36 EMA, or your trend line at least. And if the price creates another nice 1 to 3, for instance, I don't know if it comes back now to the 36 or later on, but when that happens and the price creates a lower low again, you can start trailing it again. Okay, that's the way you do it, because it's win-win. I mean, whatever happens now, you still keep the 2 lots, at least the 1 lot. Yeah, in case you don't move your stop, but if you trail your stop to break even if the price over the trend line, of course, even if the price comes back, hits the stop, you keep the 60 and 30 pips. Yeah, and if the price really moves lower, you have to look for your longer term targets. And what should you do? Like Zoran's trade from up here with about 200 pips now, what do you think is the target here for this remaining lot? What should be the target? We have our horizontal support and resistance areas in place. Yeah, please, more than 1 or 2 answers. Help me out a little bit. Okay, exactly. Yeah, the support area, our ranging support coming from the weekly chart. You don't have to put it exactly at 127.70, but this area, now if you want to check out the daily chart again, so between down here and up here, it's a 28 area, is our major support. Right now, if you target the 28 area for now and the price goes to there, you watch closely. If the price breaks this area, great. If it's bouncing, you take the profits out, and you will be probably very, very happy risking 20% and making what, 400? Yeah, maybe. But that's the way you have to do that, or you should do it, and it's not difficult. As I said, you just need to practice it a little bit. And I think it's a very, very important lesson to combine higher and lower time frames, and also see the importance of not trading too quickly against the main move in an area like this. Okay, and again, reinstating on lower time frames if support is too close. Do you all understand that, or at least the basics of it? Because it's I'm recording it and you can watch it later on. Okay, perfect.